Welcome to video number 6. In the last video, we talked about adjusting entries, the accruals, deferrals, and bad debts, expense, as well as depreciation. But why do we need to know about those? Because we need to plot it right here, the third and the fourth columns of the worksheet. So in this episode, let's complete this worksheet by answering the illustrative problem that was introduced in the episode 2 of this series. Actually, this series of episodes are based on that one illustrative problem. So before we try and complete this, let's have the recap on all the episodes so far. Before we do this, please see all previous episodes first to maximize learning. Don't worry, because the episodes for this series are not lengthy. And remember this, for example, if you start at episode 1, at the end of the video, there will be a suggested video that will lead you directly to the next episode. So go and check it out. The links are on the description below. Now let's recap. On episode 1, we answered the question, what is accounting and what do accountants do? On episode 2, I introduced this illustrative problem, which will be used for this whole series. On episode 3, this first set of transactions have been journalized, and these are the journal entries, while this set of transactions have been ignored or was not yet tackled. On episode 4, these journal entries have been posted to the T accounts or the ledger, and it became like this. Also, on the same episode, the totals of this ledger or T accounts were organized in order to form the unadjusted trial balance, and this is the unadjusted trial balance. In this current episode, again, we need to fill up this third and fourth columns of the worksheet, and to do that, we need to consider the set that has been ignored again in episodes 3 and 4. These are the set of transactions. The first set of transactions was not ignored, that is why there are journal entries pertaining to this one already. So let's start with adjustment number 1, which states that rent for 2 months has already been used. So this is directly related to transaction C, where our company paid in advance for 5 months rent. That is why the initial entry is debit prepaid rent, which is 3,000 per month times 5 months, which is 15,000, and credit cash of 15,000. Since 2 months has already been used according to this, then the rent expense of 6,000 must be debited, and of course, we have to credit the prepaid rent also of 6,000. And as you can see, the company used the asset method. Since the advance payment was recognized initially as an asset, so naturally, on the year end, the adjustment focuses on the expired portion of the deferred asset. But what if the company used expense method? So if that's the case, the initial recognition will be rent expense 15,000 and credit cash 15,000, even if the benefit has not yet been consumed. However, as an adjustment, remember, only 2 months rent or 6,000 was actually consumed. So you need to deduct 9,000 from the rent expense. So we have to credit rent expense for 9,000 and debit prepaid rent for establishment of the unused portion. Number 2 adjustment is related to letter D, where the company purchased supplies of 20,000 partially on account. That is why the entry is debit supplies 20,000 and credit cash 10,000 for the down payment and payable 10,000. But in this, it is said that the remaining supplies is 3,500. So that means 16,500 worth of supplies was used. So at the year end, we need to debit supplies expense of 16,500 and credit supplies 16,500. But then again, in the last video, or episode 5 for adjustments, I emphasized that supplies is also a deferred asset, so it can also be accounted for using either asset method or expense method. What we did here is what do we call as the asset method. But if we use the expense method, the initial entry of course will become, instead of supplies expense of 20,000 and then credit the same cash 10,000 and accounts payable of 10,000. Now, in the year end, we are going to establish that only supplies of 16,500 was used. So the supplies expense should be credited by 3,500 to reflect the actually used of 16,500. And of course, we are going to establish the unused. So we're going to debit supplies worth 3,500. Adjustment 3 is related to transaction E here above, where office equipment was purchased for 30,000, which is why the entry is office equipment debit 30,000 and credit cash 30,000. And according to this number 3, the office equipment has a life of 5 years and a salvage value of 500. And as you can see, this equipment has already been used for 2 months. That is from November 1, 20x2 and December 31, 20x2. So that's 2 months. So which is why at the adjusting entry, we need to debit depreciation expense and accumulated depreciation office equipment as the credit. But the question is, how are we going to compute for the amount? So I have already discussed this in episode number 2. Which is, if you wanted to compute for the depreciation using the straight line method, you need to start with the cost. And the cost here is 30,000. After that, you need to deduct the salvage value. So we have 500. So the depreciable amount related to this problem is 29,500. After that, you need to divide it by the years of useful life, which is 5 years. So we're going to get the depreciation per year of 6,000. But since the office equipment has only been used for 2 months, you are going to multiply that with a fraction, which is 2 months over 12 months, and there you go, you're gonna get the amount 983.33, the depreciation expense for 2 months. You need to use that in this entry. So debit depreciation expense 983.33 and credit accumulated depreciation office equipment of the same amount. Number 4 and number 5 is not related to any transaction here, so let's consider them separately. So number 4 is an example of an accrued expense. So in here you have unpaid salaries of 3,000. The adjusting entry is simply debit salaries expense of 3,000 and credit salaries payable of 3,000. While number 5 is an example of accrued revenues, which the adjusting entry is just debit receivable and credit revenues. And in this case, since you billed customers for services for 5,000, so you just need to debit accounts receivable of 5,000 and then credit service revenues of 5,000. And the last number, the number 6, is directly related to transaction H, which is a deferred revenue because the customer paid in advance 80,000 for 5 months. So that means your services are worth 16,000 per month. In the date of the payment, which is December 1, the entry is debit cash 80,000 and credit unearned service revenues of 80,000. Unearned service revenue is a liability account. And why did we do that? Because if you are considering the deferred revenues and the problem is silent, the liability method will be used. But if we talk about deferred expenses, just like this prepaid rent as well as supplies, if the problem is silent, the asset method will be used. And you need to remember that. According to this, 1 month of advance payments or 16,000 was already earned. So unearned service revenues at the year end should be debited to reduce the account because again 16,000 was already earned, and of course service revenues account should be credited. But if we use the revenue method, we're still going to debit cash 80,000 but credit instead the unearned service revenue. We're going to credit the service revenues of 80,000. And on the adjustments, we should focus on the unearned portion, which is 4 out of 5 months, or in money terms 64,000, or 4 months times 16,000 per month. So you need to debit service revenues of 64,000 and credit unearned service revenues of 64,000. So that's it for adjustments. But what entries do we need to put in the worksheet? So we have this number 1, and then number 2, number 3, number 4, number 5, and number 6. So why is that again? Because we adopted on the deferrals, both on the deferred expenses and deferred revenue, the adjusting entries for the liability and asset method, because our illustrative problem is silent on the treatment of such deferrals. Now, let's complete the worksheet. So this is the worksheet with the unadjusted trial balance. Let's now post the adjusting entries. What are they again? I know you did not memorize all of those, so here they are. So now let's post. So debit rent expense, you post it right here. And also credit prepaid rent, you post it right here. Debit supplies expense 16,500, you post it right here. And then credit supplies right here. Depreciation expense 983.33 should be here, and the accumulated depreciation should also be here. The salaries expense should be debited here, and salaries payable should be credited also by 3,000. The accounts receivable debit 5,000, and then service revenue should also be credited by 5,000. And the last adjusting entry, we have an earned service revenue debit for 16,000 and service revenues for 16,000. So that's it for posting. But the third and fourth columns will never be complete if ever we are not going to add all the debits and all the credits. So the total for the debits is 47,483.33, while the credits is also 47,483.33. Now it's time to complete the rest of the worksheet. Let's fill up the fifth and the sixth columns for the adjusted trial balance. But how do we do that? You just have to summarize these four columns. Let's start with cash. So on the unadjusted trial balance, we have 87,950, and there are no entries in the cash in the adjustment. So you just need to copy this balance to the adjusted trial balance. So we have 87,950. On the accounts receivable, there is no balance in the unadjusted trial balance, but there is a debit entry on the adjustments. So you also need to copy that one to the adjusted trial balance. But in the supplies, the original entry is 20,000. However, in the adjustments column, there is a credit of 16,500. So in the adjusted trial balance, the supplies should be the difference between the two because they are opposite. This one is on the debit and this one is on the credit. Remember this. If in the unadjusted trial balance, the account title has a debit balance, but on the adjustments, there is a credit entry, or the other way around, which is if in the unadjusted trial balance, the account title has a credit balance, but in the adjustments column, there is a debit, then what will appear on the adjusted trial balance is the difference of the amounts, just like this supplies account. In the end, the supplies of only 3,500 will be registered on the adjusted trial balance. But if both the amounts in the unadjusted trial balance and in the adjustments has the same balance or the same normal balance, like for example, both are debits or both are credits, then you need to sum them up. So applying what we have learned, we have here the prepaid rent at 15,000 in the unadjusted trial balance, but we have 6,000 credit here on the adjustments. So we need to get their difference and put it right here on the adjusted trial balance, which is 9,000. We just need to copy the office equipment, which is 30,000. And we also need to copy this 983.33 for the accumulated depreciation here on the credit. We just need to copy also the accounts payable of 10,000, but on the unearned service revenues, we need to deduct the 16,000 debit adjustment with the 80,000 because again, they are opposite again. And we have 64,000 credit, and the salaries payable, we just need to copy this 3,000. And of course, we need to copy the capital as well as the withdrawal. So we have 100,000 credit and 25,000 debit. But on the service revenues, you have here 40,000 credit. On the adjustments, there are also 16,000 and 5,000 credit. So you need to add them up because both of them or all of these entries has the same credit balance. So we have 61,000. And we have the supplies expense. You just need to copy that, 16,500 here. And we have the salaries expense. We have 30,000, but in the adjustments, we have also a debit of 3,000. So we need to sum them up. So we have 33,000. The rent expense is 6,000. You just need to put it right here. And the 983.33 depreciation expense, you should also copy it here. So lastly, we have the utilities expense. We have 19,750 and 23. So the 5th and 6th columns will also never be complete if we're not going to get the totals of the debits and the totals of the credits, and they would be 238,983.33. Of course, the credit balance should also have the same balance. Now, let's complete the 7th and the 8th columns pertaining to the income statement, or what we call now the statement of comprehensive income. Here, you just have to copy the balances of the income statement accounts, or in simple terms, the revenue and expense accounts. To make it easier, I have put an asterisk symbol on the income statement account balances. So we just have to copy it from here to here, and it will look like this. Now, the next step is to add the debit and credit balances, but don't expect that it will have the same balances just like here, here, and here. Actually, if we're going to add all these debits, we will get 78,533.33, while the credits is only 61,000. So get the difference, which is 17,533.33, and add it in the lower amount, just like this one. So of course, after doing that, the debits and the credits will have the same balances. But what is the meaning of this, especially this amount? Actually, you know already that the expenses are on the debits, right? And of course, the revenues are on the credits, right? So this means, since the debits are greater than the credits, then that means there is a loss, which is 17,533.33. But if the credits or the revenues are greater, on the other hand, of course, the difference of the two will become the income of the company. The last two columns is intended for the assets, liabilities, capital, and withdrawal account balances, or in simple terms, those balances of not income and expense accounts. And since the income and expense accounts right here has asterisk, then that means the balances with no asterisk shall be copied right here, and it will look like this. And of course, the same with the income statement. The balances for the debits and credits will not also balance, so don't expect that. Actually, the balance for the debits here is 160,450, while on the credit, we have 177,983.33, which is also off by 17,533.33. So you need to add that to the lower amount, and of course, they will both be balanced. Now, as you can see here, we added 17,533.33 on the debit, whereas on the income statement, we added the credit balances. So don't worry, it is supposed to be. When we are going to talk about the company incurring a loss, that means you need to expect that if the company, instead of a loss, will have an income, the adjustments will be on the debit of the income statement and the credit on the balance sheet. So that's it for this particular video for the completion of worksheet. If it helped, please do subscribe and hit the notification bell to be updated on my next videos. Thank you for watching.